Hello nieces, hello nephews, it's your Uncle Charles here, and today Uncle Charles is about to feed his nieces and nephew with some price action technical analysis. And if that sounds good for you and you don't mind being my niece or my nephew, definitely hit the subscribe button, hit the like button, comment below, tell me your thoughts. Do you agree with me? Do you not agree with me? Whatever you feeling, definitely come be a part of this community, okay? So this is Uncle Charles' Discord right here, where I post all my plans for the day and throughout the day. You know, I post a lot of stuff throughout the day to keep the members on the right side of the trade. Hopefully I've been helpful. Okay, so I wrote here that, well, I had some details here, okay? We are in a technical day trading market, which is why follow through can never be assumed, and waiting for the retest for confirmation is important. I want to talk about that a little bit. I made a video about it. Check the link in the description below about the importance of some concepts, okay? And waiting for the retest for confirmation, you know, it's not a proper term. I call it back test and go. It should be called retest and go. But it's too late. I'm too far down the rabbit hole, okay? So you're going to have to get used to that improper name, all right? Anyways, so backtest and go. Definitely check out the video in the description below. And we're going to talk about that a little bit more eventually in this video. But here was the plan. Bull case scenario. I'm only bullish when a resistant level gets cleared to set up the second leg up. Okay, Uncle Charles don't try to catch the first leg. I try to catch the second leg. And I have to wait for resistance to clear, okay? First level is 438.5, all right? If cleared, 439.5 to 440 is in play, then 442.5. Okay, that was my bullish scenario. My bearish scenario would have been if SPY was below 438.5, put in the 50% retracement level at 436 to 436.5 zone in play, then 434 below that, and so on, okay? Basically, off the open, SPY was already making some strong moves to the upside. Okay, so already this 15-minute candle, already on our first candle, SPY cleared the 438.5 level. Okay, so boom. Usually I recommend folks to wait for a retest or the back test as a support before it heads up higher. In this case, the bull's momentum was far too strong. I did not trade this first candle. Waited a few minutes for this candle, and seeing how strong the momentum was and the fact that it cleared this second resistant level, that's just strong buying pressure. Okay, so I ended up buying the breakout. Buying the breakout didn't work out for me yesterday, but I had a good feeling this time. Okay, and boom, was I right? Okay, it went up to the blue line right here. That's the 442.5 resistant. Shaved off some profits there. Okay, now here's where it gets interesting. Here is where, now just in case the beginning was a little too tricky, Uncle Charles, we didn't get no back test. We didn't get an entry. That's fine, because remember, there's always another opportunity. So check out this, where this green arrow is pointing right there. All right, so this candle right here, 1015 candle, we cleared that 442.5 level. This very next candle treated that level as a support. Gotta be fast. Treated that level as a support and started heading up higher, okay? I had a price target at 444.5. That's the yellow line right here. As you can see, it was a few cents just off of it, excuse me. All right, a few cents off of it, 22 cents to be exact. All right, but a good scalp play. Good scalp play, all right? However, didn't quite hit my price target at first, but then we started basing going chop city a little bit, okay? However, all right, what do I always say? After we clear resistant, watch for the back test of that same level be treated as a support, okay? Only turn bearish if we actually lose our support, which I was right into my Discord members all day about. Now look at here. Finally, it made us wait hours, but when we finally back tested the 442.5 level as a support again, we did get one here, good entry. But we came back and back tested as support again. Got some strong buying pressure. You can see off of those wicks. Those nice long wicks. Came all the way up towards the end of the day. Crushed our 444.5 price target. All right. Could have took profits there or set an in-profit stop loss so you can ride it up just in case you believe it go higher. And boom, look at that. Even on this candle right here, it back tested 444.5 as a support. All right, and then it was able to close above. And in the day, very profitable. Okay, but look at this big red candle. This big red candle make me laugh. And it's a reminder to Uncle Charles why I do not swing trade. All right, it's probably reacting to the Netflix earning. Okay, I haven't got a chance to look into it. Don't want to talk about anything I don't know about, but yeah, it's probably reacting to that, and I'm pretty sure Netflix is dumping right now. Okay, so that's the 15-minute chart of the SPY. Okay, always remember, wait for that retest. All right, when we break a resistance, wait for the retest as support. Okay, even if it takes you all day, even if it means missing a trade. Okay, it's worth it, guys. And the same applies. Same rule applies for the other way down. If we lose a support, wait for the retest as a resistance. Okay? So, something I want to talk about. All right? Yesterday, I mentioned something about a healthy pullback. Okay? Here's why I'm calling this a healthy pullback. Okay? So, here's my fib level starting from the February low to the March high. Okay? You guys should be experts at Fibonacci levels at this point. At least I hope so, okay? So in a strong, healthy uptrend, okay, it happens a lot where when the uptrend goes into correction mode, we do get a bounce from the 50% to the 61.8 retracement zone, okay? It happens many times and many uptrends, okay? The 50% retracement zone to the 61.8 retracement zone is usually where the pullback ends and the next leg begins. All right, in an uptrend. So as you can see here, for the last week, SPY has been chopping. Okay, I did have some resistance around the 444.5 level. Okay, I'll add that blue line there. Change it to pink so you can see it. It's more bright. Okay, and as you can see, all last week we struggled to break above that, and failure to break above, and from that level got us some strong selling pressure. Okay, all right, so the fact that we cleared it today is a big win for the S&P 500. Yes, I know we are dropping in the aftermarket, but aftermarket and pre-market to me is just noise. What I count the most is what happens during the trading hours. Okay, and the way the trading hour ended, it was a win for the bulls. Okay, we cleared 444.5. All right. Yesterday we got that bounce from the 50% retracement level at 436.4 ish. Okay, that's you. Remember, 50% to 61.8 retracement level is usually where the pullback ends. So right now the setup is there, guys. Is it guaranteed that we're gonna see more upside? Absolutely not. It's not guaranteed. Nothing's 100% in this market, and I'm fine with that. I'm fine with trying to thrive and survive in the unknown. Okay, that's what TA and price action is for. Okay, but this is a big win. The setup is there for this to be a bottom. Okay, I did mention to the group, if we can clear 444.5, especially after bouncing from the 50% retracement level, SPY could have reached a bottom. Okay, and as long as 444.5 holds, I think the bottom is in. If we lose that level again, then obviously we're gonna go back and test support level, and the chop continues. All right, below 444.5, I got 442.5, 38.2 retracement level. I got the 50-day moving average around 440.5. You know, I got the 438.5 level, and of course the 50% retracement level at 436.4 ish. All right, that's the bearish scenario. Play it level by level, and if we lose that 50% retracement level, I got a level at 434, and then if that fails, the 61.8 retracement level at 430.37. Okay, so my sentiment on the market is always subject to change based on the price action, but as of right now, based on the price action that I'm seeing, bouncing from this 50% retracement level, recapturing the 50-day moving average, clearing the 444.5 resistance level that we struggled to clear all last week. Okay, this was a critical level. All right, we cleared that level back in March. All right, back tested it as a support March 23rd to March 24th, and that triggered more upside. All right. Back in early April, we treated that level of support, and when we lost that support, we back tested as a resistance, which triggered more downside. Now today, we are back at that level again. That level has been a magnet for the S&P 500. We are back above it, and this could possibly trigger some more upside and retest that 200-day moving average. Okay, at 448.448. Yeah, 448.48. All right, it could change by tomorrow. All right. And I may look to short there, okay? I'm letting you guys know ahead of time. I may or may not look to short there depending on the price action. But as of right now, if I was to short, maybe even to scalp a short play or whatever, level to level, whatever the strategy is, I'd probably look to enter around the 200-day moving average, okay? So as long as we're above 444.5, I favor more upside to the 200-day moving average, and above that is 450. We clear 450, the chart is bullish on the S&P 500. I definitely will have no doubt that the bottom is in. Right now, it's looking like the bottom is in. I have a feeling that the bottom is in, but I'm still willing to change my sentiment, okay? I'm not just going to be biased or stick to one thing just because of what the price action was, yesterday, because it could change by tomorrow, and I'm willing to adapt. It's not about predicting or anticipating. It's about simply reacting. That's why I identified these support and resistance levels for you guys, so you can react accordingly, which is if we clear a resistance, you wait for the retest as a support, which would confirm more upside. So right now we have only one close above 444.5. Tomorrow we need follow through. Okay, 444.5 needs to hold, all right, to show follow through for today's breakout. Okay, at the minimum 442.5, because we also cleared that level today, so we definitely don't want to lose that level. If we do lose 442.5, I would be more bearish. Of course, if we lose this level 444.5, I will probably look to short real quick down to the next support level. Okay, level to level, I don't take it no further. All right, but if we lose 442.5, that is not a good look and definitely not ideal for bulls. Okay, it would be a false recapture or a false breakout. All right, so tomorrow, the bulls need to come through with that follow through. All right, so whatever levels they captured today, 444.5 and 442.5, are must hold levels for tomorrow. We lose those levels, I favor more downside. Okay, possibly all the way down to the 61.8 retracement level. So let the price action guide you for tomorrow. Don't try to predict, just react to it. You guys should know how to react to these levels by now. If not, check the video in the description below about me talking about some trading concepts that you absolutely must know. Okay, and here is the VIX, and there you go. We lost that 22.94 level. That's a 23.6 retracement level. I usually round it up to 23. All right. That level, we lost it yesterday. That level got treated as a resistance. As you can see here, you see that wick? Treated as resistant. Okay. Back test and go, but to the downside. We went and tested that 200-day moving average. All right. That's that pink line right there. 200-day moving average, back tested. It's holding right now. So if VIX closes below, that's around 21 right now. Below 21, we'll put 1844 in play. That's very bearish for the VIX. All right, for VIX to be bullish, it needs to continue to stay above that level, of course, and clear 23 again. All right, because as of right now, we're getting bearish momentum to the downside for the VIX. All right, bearish VIX, bullish SPY, and vice versa. Okay, and now QQQ here recaptured some major levels as well. Okay, it opened around the 61.8 retracement level. All right, because I got some fib levels here from the March low to the end of March high. Okay, so we bounced off that 61.8 retracement level around 337.86, recaptured it, got back above the 339 level, recaptured the 344.36 level. That is a critical level, which is 50% retracement level of this up move. Okay, now we still got that 50-day moving average acting as resistance. That's the orange line right there. Okay, at 347.3. If SPY can clear that, 350 is back in play. Very bullish. Okay, so when do we turn bearish? Obviously when we lose the support. So tomorrow needs to show follow through. 344.36 is a critical level. If triple Q opens above that, that is then support. Let's see if it can test the upside levels, okay? If it opens below that, it needs to recapture that level to put upside levels back in play. 50-day moving average, then 350, all right? But if we lose that level below 344.36, I would be bearish, and I'll favor back to more downside, all right? There's some level around 341.5-ish, and then 339, and then 337.8. Those are my levels for triple Q. And look at this Dow Jones. You see the white lines? That's a bull flag. Dow Jones with the strong breakout. All right. So this is the bull's chance. Dow Jones gave us a breakout. This is the bull's chance to capitalize on this and push it to more higher levels. First resistance being the 200-day moving average at 350.28. If that clears, 350.69 is in play. And if that clears, we still have some resistance around 353.75. That was the end of March high. So if we can clear that to avoid a double top, that would put 359.59 in play, okay? I would turn back to bearish if we lose a support, and the support is at 346. So below 346 is bearish. IWM managed to recapture this yellow triangle pattern, okay? And it closed right at that 201.3 level, okay? So we need to clear that resistance level. It did clear it today. So it needs to open above tomorrow, show some follow through. And let's see what levels we got. We got a level around 203. That's a 20-day moving average. And then this level all the way up here around 209, okay? So above 201.3 is bullish, 203, then 209 is targets, okay? Below 201.3 is bearish, putting 199.3 back in play. Below that is a breakdown of this yellow triangle pattern. Apple, nice, beautiful play, bullish move over here, okay? So got the fib levels, all right, mid-March to the end of March. And Apple retraced 50% of the move down to 164.96, okay? Gave us a nice, it closed just above here. It washed below here, but did not close below it. And today treated that level as a support and managed to recapture the 166.3 level. As long as 166.3 holds, I'm bullish. 168.4 is in play, followed by 170.2, then up above 172.7-ish, okay? Right now, I'm bullish on Apple. I'll only be bearish if we get back below 166.3. And Tesla's looking great. All right, as you can see here, many bounces off the that's the 50% retracement level actually, okay? Around 972 to 973-ish, all right? Close back above that 5-day moving average. Once again, that's actually the second close from yesterday above it. So 1,005 is first support. Below that's 972, okay? Next big resistance, and we tested it today, was 1,036. Got a nice, decent rejection from there. That's actually the 61.8 retracement level. So if we can clear 1,036.7, that's a big win for the bulls, okay? Recapturing the 61.8 retracement level would definitely put 1128 back in play. All right, guys. So that's what I have for you guys today. I hope you guys had a very profitable day. I hope you guys, if not, I hope you guys are at least learning, especially learning about confirming breakouts and confirming breakdowns with the back test and go strategy. All right. So thank you guys so much for watching. This means a lot to me. Please hit that like button. Please subscribe. Join the family because family is important. And remember, Uncle Charles loves you.